This is the 10-Minute Contrarian Podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, nononsenseforex.com, and podcast players everywhere. Episode 190 is brought to us by Bybit. There are so many things at Bybit going on right now, I can't possibly sit here and list them in a 1-minute ad read. So normally I just don't. I just tell you, hey, there's a lot going on, check it out, and then people do, and they're like, wow, this is like over the top for something that's free to join. But you're also getting a huge, well-capitalized brokerage platform, a giant spot market where you can buy pretty much anything you want, and a customer satisfaction rate that is off the damn charts. What you do is you go down to the show notes, you click on the link to the Bybit blog, read the blog, see if it is for you, and then if it is, click my affiliate link at the very bottom of that blog and get yourself started, because you're about to find out that with Bybit, membership has its rewards. It is the 10-Minute Contrarian Podcast, and I was really looking forward to this episode. I look forward to most of them. I enjoy doing the show. But we haven't done a concepts episode in a while. And it is high time we did, I think, because we have some of you that have listened to all 190 episodes of this podcast. We have some of you here probably joining us for the first time. And we have some of you that found us sometime in the middle of 2024. But like any podcast, we have certain words and phrases that we use more than other podcasts do. Some of them we just kind of invented on our own. We'll talk about a couple of those today too. But you will hear me often say, and yes, I am bragging when I say it, don't ever get it twisted, that I like to buy things when they are cheap. And the reason why I brag is because we have done a very good job of this on the podcast in the 3 or 4 years, I can't even remember now, we've been in existence. 190 divided by 52, we're going on 4 years. And it's pretty amazing because what we attempt to do here on the show, if you did not know, is we go after things that have really large upsides. But we also do two other things that are equally as important. One, we play defense to make very sure that this money that we've worked so hard to earn doesn't go away for some dumb reason. And we attempt to take as few L's as possible, because I don't think I have to explain to you that if you keep your L's down and you let your winners run, Forex traders, that really, really good things can happen. And we have had, really, when you think about what we're trying to do here, we've had so few L's and some absolutely gigantic winners here on the podcast. And some things that you may consider to be L's really are just things we're holding on to and waiting for the sector to come about. So if you were to end the game now, yes, it would be an L. But that story has not been written yet, and we'll talk about that too. But when I say the word cheap, there are several different ways that something, in my mind, can be cheap. Now, everybody has their own version, but for the sake of this podcast, I have 4 different ways written down, and we will go through all 4 and also give examples. Now, the very first one is my least favorite, and it is, out of the 4, the one where we have taken the majority of our L's. And that is being very early to a brand new sector. Now, make no mistake here, the gains can be absolutely tremendous if you get it right. It's just that the probabilities of that are not as high as I would like. I like to put the odds in my favor. And you're not really doing that with these, but the upside typically mitigates that. So that's the reason why you would. For example, one of the losses we took earlier on in the life cycle of this podcast was with carbon credits. Made a lot of sense. It's what the government was doing, and you already saw companies adhering to it. But as far as the actual companies themselves that administered these, it was just too early in the game. They didn't quite know what they were doing. They were doing it poorly. And trust me, I don't go into a new sector unless I think it's like a real slam dunk. And it was just executed very badly. And what's interesting about this sector is even with the new administration we have now in the United States and the way sentiment is going, these things could still come back. So keep your eyes peeled. I know it sounds absurd when I say it, but we were too early. We took a big L on this one. Now, another one you could probably say that about too was the metaverse overall. Now, I did not go too deep into actual open world metaverse projects. I went deeper into gaming, which I think is a whole different thing altogether. You heard me talk about sectors that just haven't had their time yet, but are probably going to. That's where I would put gaming. So certainly not an L, but a lot of those, the majority of those positions I took in gaming are currently down because it just takes a long time for this sector to build. And most of your typical crypto investor just does not have the patience for that. And so this is almost where I get punished for having patience and doing things like a grown-up investor should. But that's fine. And I said hopefully we'll see some real traction in that space in 2025. But if you think about the actual metaverse as a whole, as a movement, had its time for a moment, and then the whole world realized what I realized. It's like, oh, holy shit. These things take a long time to build. This isn't just going to be the thing from now until eternity. Remember, that's always the narrative they push with these new things. This brand new thing comes out of nowhere, and then the whole world is like, okay, this is just how it is from this point on. Better get in now. Not realizing that everything in our history, when it comes to something brand new like this, has gone through what we call on this podcast a boom, bust, echo phase. I believe you have to go back to episode 11 if you want to understand how that works. This is not something that I came up with, but it is a very, very real thing. And if you think back to all the brand new movements that have come up in the financial world, or just in the world itself, they all go through this, and the narrative is always the same. It comes up and they say this is going to be it and the future from now on. Ring any bells? AI? I mean, it really feels like AI is never going to have its bust phase. But we're kind of seeing now it is on shakier ground now than it has ever been. It is the reason why the stock market is propped up on air the way it is. And as soon as it goes, and we saw a little bit of this when DeepSeek came out, and people thought the need for NVIDIA chips wasn't going to be as necessary as we once thought. I still think we're certainly going to see it. And as is often the case, if you do think this is going to be the future, then the echo phase is when you want to invest. Now, every time something brand new comes up in the crypto space, for example, I get all these people asking me, oh, what do you think of this token? What do you think about this space? And I'm like, guys, you should already know my answer. Typically, I don't like to do what I did with carbon credits. I like to allow the space to play out first. Let me see two things. One, is this really going to be the future? And then two, who are the players who are emerging in this space? I'm okay not getting in super, super duper early at the ICO level, for Christ's sakes. I am interested in getting in on that second wave, to where we're still very early. But I want to know which companies are emerging, which companies actually have backing, which companies turned out not to be scams on wave one, like a lot of people fell into because they got too excited. A lot of people are looking for these 200x gains by getting in super early. I am looking for, the 50x gains, but by upping my odds of winning tremendously at the same time by coming in on that second wave and being able to actually see the board to where you're really going in blind at first, which I don't like. Remember, contrarians, I cut my teeth as a penny stock trader back in the late aughts. So I know what it's like to go in completely blind and just have nothing but a hyped up story to lean on. it's not good. Jumping in on the second wave is much, much better. And don't get me wrong, I might do this at some time in the future to where you find a sector that is just so exciting and has so much potential that you might want to try and not spend too much money, but throw a little bit out there to get in super early. But I doubt it. I'm leaving a little bit of room open in case I decide to do it again. But if I ever do, just remember that the risk here is much, much greater than the risk we're used to taking on this show. Remember, you can still go fairly low to medium risk and get super outsized gains. You don't always have to be a super early adopter. As a matter of fact, if things like this really are the future and you get in 2 years later, you're still going to be seen as an early adopter. Most people I know, my friends, think I was super early to Bitcoin. I don't feel like I was. I got in 2020. That feels really late to me. But I think when history is written, I'm going to be seen as somebody who got in quite early. So I guess my point with all of this is never feel the pressure of getting into something brand new and super exciting and super narrative driven, because that boom bust echo is going to happen almost every time. Seriously, in history, I can't think of one time where it didn't. Okay, so it's time we move on. And the next few are going to be things to where we really haven't taken many L's at all. These have all been really nice W's. And I just want everybody to have this in their head when they're looking at things they might want to buy in the future. Because I'm telling you, buying cheap is extraordinary. And even though I am not a licensed financial advisor, I always tell you in crypto, but I often tell you what I'm doing, either here or on X. You can follow me on X down below in the show notes if you haven't already. But I'll let you know what I'm doing. I made moves earlier this week, but I'm actually getting ahead of myself on that one. Let me go ahead and talk about the next one, and that is cyclical lows. So when you see spaces that have been around for a very long time, and they run in cycles. So energy is a perfect example of this one. When you see things that we are going to need again at some point because energy is life and we can't sustain without it, and you see them scraping along the bottom or really dropping to where not even a year ago they were doing really well, well, then you should really be paying attention to that because it's only a matter of time before they go back up, because they always do. Even if it doesn't seem like it, like natural gas, for example. Something that I had gotten wrong in the past, and then I later on got fairly right. But again, we don't know how that story is going to play out yet. Currently, something we talked about on the show a couple months ago, lithium is cratering at this point. But we are going to need it. And I laid out the case as to why. It's not just because it's at a cycle low. There are quite a few other very important reasons as to why I think lithium is going to go up quite a bit in the future. And it would be a really good idea if you were to buy it when it's cheap. Because as we've seen in the past with things like lithium, people like to buy it when it's screaming upward, which is not the time to buy. You want to buy when it's cheap and unloved, and you get a knot in your stomach when you're hitting the buy button because you think that you're never going to see another move up again, or there's the possibility of that, and that really bothers you. Well, just know that with energy, that's almost never the case. Cycle lows are cycle lows. Narrative sucks, and that's exactly the time you want to buy. We've done that with uranium here on my channel back in 2020. I have a very strong feeling we're going to get it right with natural gas this time. And if we finally do get our recession or our big correction this year, you just wait and see what's going to happen to the price of oil. But cycle lows, to me, are quite a slam dunk in many ways. And so just always pay attention to that because we don't get them often. But when we do, you got to jump on it. Because unlike so many other things we invest in where the future is unknown, the future is a lot more known on these things because we have a lot of history behind it. And so I really like things like that. Kind of like when we talked about bond funds last week. I'm like, the thing that makes these things so great is that we have an added bonus of pretty much knowing that if things continue on this trajectory with rates dropping, that these things are going to go higher. It's not guaranteed, but it is a probability, and it's an extra probability we have in our favor that we don't have elsewhere. And I feel like energy is the same way. Again, the reason why we win so much on this show is because we do everything we can to stack the odds in our favor. And with cycle lows, this advantage is already built in. I hope you guys understand that. All right, moving on to the next one. And this is something you see in crypto all the time. And this plays into our strengths, contrarians, like nothing else. And this is the concept of sweet divergence. Sweet divergence is something we have coined on this show. And here's how it works. The crypto market drops for no good reason, but because it's the crypto market, and especially with altcoins, we have a lot of people in the space that have really weak hands, either because they don't know what they're doing, they are investing money they cannot afford to lose, or they just simply panic and emotions take over. It's a very immature market, and holy shit, can we take advantage of that, and holy shit, have we taken advantage of that so many times in the past, and I currently cannot think of one time where it has not worked in our favor. So if you're new, here's what we do. We invest in tokens that have higher market caps, which are established, which are already leading their space, which already have huge partnerships and a very bright future without a lot of the guesswork of the smaller cap tokens. Now, if you look at our history too, we invested in a lot of these when they were smaller cap, but they're bigger now. And so what we're currently doing more than anything is reinvesting in those larger projects, because remember, odds in our favor, when price drops irrationally, which is like literally all the frickin' time. Like I mentioned a few minutes ago, look at what happened this past week, these past 2 weeks. Everybody is so worried about the recession coming up that any tremor before the actual earthquake, people freak out and start dumping. And as we've seen, it hasn't been the actual earthquake. What happened this past week? We had the price of crypto drop a lot. Everything dropped, but crypto dropped even more because that's just how it goes, like we said before, because people thought that Trump putting tariffs on Canada and Mexico was going to crash the market. Now, somebody like me who doesn't panic is sitting back and wondering a couple things. One, how do we know what the hell tariffs were even going to do? Most people were just guessing at that point. Two, like I said on my tweet on Sunday, I think it was, I said, this could all be over by tomorrow. We've already seen Trump uses tariffs as a negotiating tactic because he's playing big stack poker. A lot of times he dangles these tariffs out there just to get what he wants, and that's exactly what happened this past week. And so I said, these drops are completely irrational. People were talking about this, this is the largest drop we've had in the crypto market since SBF. I'm like, well, okay, if that's the case, I'm looking at things, I'm like, well, this isn't SBF. The SBF thing was pretty bad because it shattered confidence in the overall crypto market. Avalanche and Chainlink and Litecoin dropping has nothing to do with tariffs. They are not correlated in the least. Yet these dumb people in the crypto market are dumping them as if they were. And so when certain instruments go down a lot for no reason, this is what we call sweet divergence. The market goes down a little, certain things go down a lot, and they go down because of things they had nothing to do with. I have pulled the trigger and rebought almost every time I've seen something like this occur. Now, those prices didn't instantly go back up. They're still pretty much down at the levels where I bought them, which is nice for people who still want to get in. So let me give you an example. Let's take Avalanche. On November 4th, the day before Trump got elected, it was sitting right about $24. Now, we like Avalanche a lot. We have talked about why. It is the main chain for Web3 gaming, but does so much more than that. It is an established player. It has, I mean, if you pay attention to what you invest in, there's a ton of reason for optimism here. But it pumped all the way up from 24 to 54, more than doubled after the Trump victory. And of course it should. Now we have a clear path that we didn't have before. It really was the one thing holding us back, and now it's gone. There is a very good reason for all the optimism behind crypto. It should be trading at multiples from where it is right now. And so we saw AVAX go from 24 to 54. You know where it is right now? Right back down to 24. How did this happen? Why did this happen to something like AVAX? Did it deserve all of its optimism? Yeah, it sure did, and still does. Did it deserve to drop back down to where it was? No. Like, what the hell did AVAX do? It didn't do anything to lose over half of its value. I think the future is still tremendously bright for it. There's no reason to make me think otherwise. Like, nothing has happened to reasonably make me or anybody bearish on this particular project. But you're getting a 60% discount from a high that we saw only 5 weeks ago? Sweet divergence. Not financial advice. I'm not allowed to give it. But this is when you buy. If you're upset that you didn't get in as early as you wanted to, now is your chance to get in at an artificially low price. Now, the only major way I think I could be wrong here is, if something happens to AVAX, of course. But if we do have this recession coming up, and if it's for real this time, well, then, yeah, everything's going to go down, especially crypto. But then you get even cheaper prices, which I do not recommend you wait for because, as we have seen in the past, we may not see a recession. We might see much, much higher prices before we ever see something like that. You just don't know. So the move is to buy when things are cheap, as I think they are now, and then DCA down if you get even cheaper prices. It is quite simple. Now on to the very last one, and this is also a term we have coined here on the show. And this is something that doesn't happen as often, but when it does, you really have to take notice. And it's weird because this one feels this one gives you an even bigger knot in your stomach when you buy it, because you don't really feel like you're getting this at a discount, but you actually are. And it's very hard to train your brain into thinking this way and feeling this way. And this is something we have called sour divergence, because it is very much the opposite of what I just got done talking about. So what happens during sour divergence is you get a drop in the overall market and everything is falling. And again, crypto is a great example because the market falls more and falls for less of an intelligent reason. So you see this going on, but you see that one or two, token projects that they just aren't dropping with the rest of the market at all. They are holding their price, or in some cases, they're actually growing. They're actually going up in price when it seems like everything else is absolutely falling apart. There must be a reason for this, right? And there's two reasons in my mind as to why you're going to see this. One, it's just a really strong company with strong hands inside of it, and they know what's going on, and they're not dumping. And that's a really good sign, isn't it? That's great. I wish all of my investments had this level of strong hands. But the other reason why, and I'll tell you the one token that we really took advantage of here, you guys probably know, but I'm gonna remind you again, is that if everything's crashing and something is actually going up, then back to the strong hands, back to the rich investors. they know something, and they're hoping you don't see it. But, we have the technology to where we can actually see certain things go up when everything's crashing right in front of us. And this is exactly what I saw with SWE. And that's why we bought. And that has been nothing short of fantastic ever since we have. Now, let's talk about cheap here for a minute. I was looking at SWE back when it was 20 cents. And I felt like it kind of ran away from me when it moved up to 80 cents, which is closer to where I bought it. But I noticed the sour diversions happening. And I said, you know what? I think based on what I'm seeing, based on what I've known about this project in the past, I still feel like at 4 times where I was looking at it, that this token is still cheap. And in this particular case, I was correct. And so that's the big takeaway here. You're going to see things that you were looking at back when they were way cheaper. I was looking at Bitcoin back when it was 2000. That's when I first kind of heard about it and started learning about it and started seeing the cases for it. And like many of you at the time, I just didn't buy into it. I didn't believe it. I had seen internet money or iterations of that in the past, and I've seen them fail. And this to me seemed like it was no different. So, and as I have documented on my blog, I didn't get into Bitcoin until it was 8,600. Over 4 times where I first discovered it. It wasn't my favorite place to buy. But I still felt like it was a good investment, and now here we are. Now I know this podcast has gone a bit longer than I expected it to, but that's what normally happens when I start shooting these. And 2, let me go ahead. I don't know where this falls, but I want to give you a little bit of a bonus here. If you guys don't know, I haven't written a blog in a long time. I actually wrote one a couple weeks ago, and it was on gold and silver mining stocks, because if I had to make a 5th heading for this episode, it'd be like, it's just time for these things to move. Gold and silver are at very high prices. All of these mines are profitable for the most part. They might have a bunch of debt they have to pay off. But we are seeing things in the space that we normally see when it starts to move. We're seeing mergers and acquisitions right now. When you don't see them, that means there's little interest. When you do, that means get ready, because they know something. They're spending millions, sometimes billions of dollars to acquire these companies, and they're not doing that for no reason. And in that blog, there are over 30 top gold and silver mining stock picks. If you want to get in now, because I still think it would be cheap to do so, because as we in the space all know, even though it might be a bit of sweet divergence here on the other side. We've seen gold and silver move up, but the miners just haven't gone with it, which nobody really expected. And it's gotten to the point where sentiment's gotten so bad, people think that these mining stocks are never going to outdo the overall price of the underlying asset. But that's not how these things work. When they move fantastically. And you just got to buy and hold and have that level of resolve. And I'm telling you, it pays off. It's paid off for me with this whole mergers and acquisitions cycle that's going on. I am an investor in a company called Silvercrest. I don't know if I've ever talked about this, but they just got bought out by a big boy, by Core Mining. And so what's going to happen is in the spring, once this deal gets finalized, simply by having Silvercrest and squatting on it as long as I have, I'm going to get 1.6 shares of Core Mining for every 1 share that I have of Silvercrest. Awesome. This is the second time this has happened. It happened to me a long time ago with a company called Argonaut Gold. But it's happening again. And I really do think we are in for, you guys know, I'm bullish on gold and silver this year for 2025. I think the miners are going to have their time. So if you are interested in that space, or were ever interested in that space, check that blog out for sure. It's going to do a lot of the research work for you, so you can enter this space with confidence. Because I am very bullish in the gold and silver miner space this year and the next. I would have sold a long time ago if I wasn't. So just a little bonus there for those of you who have stayed till the end of this episode. And thank you for joining us here at the 10-Minute Contrarian Podcast. To where if this episode didn't already lay it out for you, One of the things you have to really be comfortable with if you're going to be in this space and reap all the benefits and rewards as we already have. Remember, we have gotten rewarded tremendously already, yet the big stratospheric moves we've been waiting for and hoping for still haven't happened. And this can happen to you too if you understand that, as weird as it's going to feel, when you buy things when they're cheap, and as terrible as the narrative is going to be, just know that you are not crazy. You are just early.